What's up you guys, Tomy Shaw here, and on today's topic, what I'll be talking about, are we going to NIRP, negative interest rate policies, okay? Where are we now? Well, currently right now, the Federal Reserve is at between 0 and 0.25%, and for the Bank of Canada, we are at 0.75%, okay? So essentially, the Fed has, or the central banks have about two tools they can use right now, okay? I put in a hammer for two tools, okay? They can essentially reduce rates to increase the NAV, the net asset value, or they can go into the repo market to put into the interbanking lending some liquidity for the collateral, okay? Or they have quantitative easing, which is essentially printing money, which they're buying treasuries, mortgage-backed securities, and anything that essentially is considered crap, okay? So right now they're looking at a new tool, which is helicopter money, to put money directly in people's bank account. Right now the US is looking to put in $1,000 per person. It doesn't matter if they're working, not working, affected by the infectious disease that's going on right now. They're going to essentially put in $1,000 per person, okay? So what's going on now? Like, if we are going to a NIRP environment, what does that mean? How far do we need to go, and what does it mean, okay? So let's look at the old system, or the system that we are in right now. When you leave money in your bank account, essentially the bank will pay you some interest. It can go up. Sometimes it could be 1%, 1.6%. Right now with BMO, I'm with BMO right now, and I'm getting a 1.6%. All I need to do is put up $200 a month, and all the balance that is left in that account, I'm receiving 1.6%. So now, this new model, NIRP, negative interest rate policy, what's going to happen is that if you leave money in the bank, essentially you're going to have to pay the bank money, because this environment is different. Money gains value over time, so they're trying to give incentive for you to spend that money. They don't want you to leave that money in the bank because they want you to spend it. So essentially, savers are losers and borrowers are winners, because at some point, if it goes so negative, when you borrow money, you're going to be paid to borrow money. So if you're in real estate, anything, as soon as you borrow money, you're getting paid to borrow that money. But where's the trap? Okay, essentially the reason why they're paying you for borrowing money is because when you're going to pay it back in the future, that money is going to be worth more. Okay, that's the trap. That's where they get you. You're getting a return on your money right now, or you're getting paid to borrow, but you're essentially going to have to pay that amount in the intrinsic value of that money is going to be more in the future, okay? So right now, when we're looking forward, okay, we have a probability of 15.7% that the interest rates will be negative in November 2020, this year. We have a probability of 15.7% chance that we'll have a negative rate in the US this year. In Canada, there's no probabilities, but there's a lot of similarities. Like, we're following pretty much the same policies as the US right now. Whatever they're doing, we're following. If they're lowering interest rates, we're gonna follow the same thing. Here in Canada, Bank of Canada, 0.75, so we need another 0.75 drop just to get to zero, okay? So that's pretty much what it is right now, okay? If you're saving money, if you're looking to save money, if you're looking for retirement, essentially you're going to have to put yourself into the middle. What do I mean by putting yourself in the middle? That means you need to find something that you can borrow at a 2% and make it 5%. You need to put yourself in the middle of a spread. Like in real estate, it's really easy. You borrow at 2% and you're making 7% on your asset. That's a 5% spread, and if you use leverage, you can increase your ROI. So you need to find these things that are out there in the market that gives you a potential to make return on your money? And are we going into a negative interest rate policy? Well, I believe that yes, it's the next thing that we're going to have to do to be competitive. Even Donald Trump is talking about going into negative rate policies. So I believe there's a strong chance that we're going to go into this environment. So we need to be prepared for that environment. What does it mean? How do you protect your money, and how do you place yourself in this situation so you get prepared for it? So if you like this information, please leave a like button, subscribe. I'll be posting similar videos about this content, and I'll be seeing you on the next video. Thank you.